Welcome to Proven and Probable. I'm your host, Maurice Jackson, and I'm joined today with Rick Rule of Sprott Global Resource Investments, and we're live in New Orleans at the New Orleans Investment Conference. Rick, thank you for joining us today.
Thank you, Maurice. Pleasure to be with you.
You know, Rick, I've had a number of inquiries regarding the natural resource space, in particular, the election. If you would, it appears, and this is maybe premature, but it appears that the country is leaning to the left. If that is the case, how does that bode for natural resource base?
I suspect the country is leaning to the left in the sense that there's a very large anti-establishment bias in both parties. I would argue, and many of your listeners would probably disagree, that in some sense Trump is a leftist. He is proposing the expansion of government, which is in effect a leftist point of view. And I think that the move to the left, the move to more of a collectivist approach in the United States is bad for all concerned. It's bad for the natural resource business because collective solutions are always bad for the economy. They make everyone poorer. Making the pie bigger as opposed to redistributing a shrinking pie makes everyone poorer and of course reduces demand for commodity products. It reduces demand for petroleum products, reduces demand for food, reduces demand for everything. People who are poorer consume less, And as 100 years of history has shown, the collectivist approach reduces economic growth. It reduced economic growth in the European Economic Community. It reduced growth in Venezuela. It reduced growth in Mexico. It reduced growth everywhere. And in fact, the opposite, when you make people a little more free, you make them rapidly more rich, as we've seen in places like China. So the truth is that the trend towards collectivization in the United States is bad for the country, it's bad for the citizens, and it's bad for the resource business.
So it's more or less a continuation then of the bear cycle here in the secular bull market, or?
Well, I think you need to bifurcate things. A bad economy and fear with regard to the economy, and in particular fear with regard to the debasement of the currency, is good for the precious metals business. The other thing that you have to understand is that this move to the left will be slow and halting. I like to quote Warren Buffett when he talks about this most recent election. He said that the country is still great enough that it will survive either Clinton or Trump. And I believe that to be true. I have watched the slow devolvement of the United States towards the left for my entire adult life. And the truth is about the United States, despite how frustrating it is for me, there is a lot of ruin left in a country as great as the United States. For all the faults that happen in state capitals in Washington, it's still a country where the political and social ethos is that a group of 5 or 6 very smart, pimply-faced kids at Stanford can form Facebook or Google or Apple in a garage. And the truth is that the private sector is so strong and so vibrant that we will somehow survive individually our collective idiocy.
Well, thank you for sharing that. In reference to, again, speaking about the government here, and although the Federal Reserve is not directly the government, let's talk about any particular price or, basis movement. Do you foresee the Federal Reserve increasing the interest rate, remaining the same, or is it just baked in the cake and it doesn't matter?
I think there's room for them to increase the interest rate. I think through no effort of their own, but rather through lots of individual effort, that the U.S. economy is slowly improving. Some of that may have to do with the liquidity in the system rather than the long-term solvency. But the truth is, I think they could get away with a 1/4 point increase in the interest rate, and I think if they can, they will. The fact that I say it doesn't make it true, of course. But I also believe that a 1/4 point increase in the interest rate is already baked into each of the debt market, the equity market, and the gold market. I don't think that matters. What could they do that would hurt the gold price? If they could get away with 2 or 3 interest rate rises, if the interest rate on the U.S. 10-year Treasury, which is really what matters to capital markets, would go from 1.75, say, to 3, then the U.S. dollar would become extraordinarily strong and the gold price would get crushed. The other consequence of that, of course, would be that the first mortgage market in the United States would go up by 200 basis points or 2%. You would kill the housing market. You might harm the long-term corporate debt market, and you would certainly harm the stock market. So will you have that kind of interest rate rise? I don't think so. But could you? Yes.
Well, switching gears now, and you just alluded to it right now, the stock market. Let's talk about Sprott Inc. Talk about, for shareholders or prospective shareholders, what's going on with the company?
Well, a lot is going on with the company. It's important to note that Sprott is focused on natural resources and precious metals. I mean, we have maybe $2 billion in non-resource assets out of a $10 billion asset under administration company. And it's important to note that we have weathered an amazing storm. Sprott is known on a global basis as a small cap and micro cap natural resource equities manager. And I think we have the biggest and best brand in the world in that regard. That sector, since 2011, measured by the TSX Venture Resource Index, fell by 90%. So our basic business fell by 90%. Putting in perspective for your listeners, Maurice, it fell by half, and then it fell by half, and then it fell by half again for good measure. During that period of time, however, Sprott didn't stand still. Sprott built our passives business, our ETF and physical trust business, a $4.5 billion business that's solidly profitable. And we kept our balance sheet together. We've got $300 million in working capital with no debt. Now, the interesting thing about Sprott is that we generated cash, free cash, all the way through a 90% decline in our basic product, unlike any of our competitors. We didn't generate as much cash as we used to. But it's instructive to note that at the bottom of the last bear market in 2000, Sprott probably generated $4.5 million in cash. At the top of the bull market, Sprott generated almost $290 million in cash, up from $4 million. At the bottom of the last bear market, we generated about $30 million in cash. How much cash will we be able to generate at the top of the bull market relative to the cash that we generate today? It's a really interesting question. My suspicion is, as I say, that we have the best single brand name in the world for precious metals and small cap natural resource investing. If I'm right about the direction of the market for the next 5 years, that should inure to the benefit of Sprott and its shareholders. And importantly, while you wait, at current share prices, you enjoy almost a 5.5% dividend.
Yes, you do. And if I'm still correct on this, how's the debt?
We have no debt.
That is amazing.
We have a $50 million credit line to take advantage of should the opportunity to do an acquisition arise. But the credit line is completely undrawn. We have about $300 million in working capital. And we have the availability of $50 million in debt. But it's important for your listeners to understand that while we have the availability of that debt, we have no need of it and have not drawn it down.
Well, thank you for conveying that. I'd like to delve a little further within Sprott. You know, one of the questions, concerns I often receive from investors is a lot of these stocks, they're OTC symbols. If there's no OTC equivalent, they can't get it. So talk to us about opening up a brokerage account and how that solution is resolved.
That's half of a larger problem, Maurice. People who trade foreign equities in the United States and they trade them on the US OTC market are frequently paying way too much for the stock when they buy it and selling it for too little when they sell it. If a Canadian stock, as an example, trades 90% of its volume on the Toronto Stock Exchange and 10% of its volume in the US OTC market, the spread between the bid and the ask in the US market can be as much as 10%, meaning that you save 5% each way buying and selling in Canada. If your broker cannot buy on both the US exchange and the foreign exchange, that is, if your broker can't act in London, can't act in Sydney, Australia, and can't act in Toronto, and you are transacting in junior resource stocks, 85% of which are foreign listed, you are using the wrong broker. You need to be able to compare and contrast the US price and the US dollar net price on the company's home listing if you are going to have a chance in junior stock speculation. Sprott isn't the only company that can do this, but Sprott is the only company that can do it, combined with having the ability to give you advice backed up by on-staff geologists, on-staff engineers, on-staff geophysicists, and on-staff financial analysts.
Yeah, and as you mentioned that, for all investors out there, please be advised. Now, we're referring to a portfolio that's comprised predominantly of natural resource stocks. This is a niche-specific company, Sprott Inc. that is, and Sprott Global, I should say. And with that being said as well, they're the preeminent name in the natural resource space. And the caveat to that as well, in which I fondly appreciate, is Rick Rule is hands down respected as probably the best credit analyst in the world. And you have access to Rick's thoughts under Sprott's thoughts as well. And Rick, if somebody wanted to contact Sprott and open up an account, what would be the phone number and website?
The website is www.sprottglobal.com. That's SPROTTGLOBAL.com. Simply click on Contact or click on Account. If you click on Contact, make sure you ask to be included in the Sprott's Thoughts subscription list. This is a periodical that we publish that I guarantee you'll get your money's worth out of because it's absolutely free. If you want to call us instead of going to the website, you can call 800-477-7853 and we'll talk you through the information that's available on the website. The other thing, Maurice, that it might benefit your listeners to know is that there's about 200 hours of free instructional material on the Sprott website. It is an absolute truism that investors who invest in their own education have better outcomes with their money. And we have made 200 hours of instructional material, including the Mining Investment College, which we did together with the Colorado School of Mines. That's free on the website. It used to be a $1,000 product. It's absolutely free on our website. So whether or not you do business with us, go to the website and take advantage of all the free material there.
I've been there, and it's an amazing resource. Rick, if an investor wanted to have their portfolio reviewed,
Absolutely.
is that still an option to contact you and have it reviewed?
Proven and probable subscribers, absolutely. Email me personally your portfolio. Email it to me personally. That's rrule, R-R-U-L-E, at sprottglobal.com. Include in the text, not as an attachment, include in the text of your email the name and symbol of your stock. I will rank the company and I'll put comments as appropriate and email it back to you. You'll find my comments and the rankings in your text.
And for listeners, we ask that you please, to help streamline those emails, put in the subject line, proven and probable. Rick Rule, thank you for joining us today on Proven and Probable.
Always a pleasure, Maurice. Thank you.
All the best to you.
Thank you for joining us today on Proven and Probable. Remember to like and subscribe for more conversations with the most respected names in the natural resource space. Check out our website at www.provenandprobable.com. The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.